Good afternoon, and thank you for tuning in to the weekly Delphian update. So the agenda today, we'll go through the market update, review the earnings trades, which are really winding down. It's pretty much done. And then Joe's going to go through some charts. And I think that's about it. And obviously feel free to unmute and ask questions or make comments throughout. So let's get started. So overall, you can see the indices, they're all popped into state 5. Some, within the past few days, they transitioned from 7 to 5. So we'll review, the SPX and Russell. You can see just in general, the chart, before we had huge numbers in 8, so they, transitioned to 7, and now some of them are going into 5. State ones have been climbing. The green pie is really high, 81%. So, it's had a really strong run, and we'll take a look at those charts. But first we'll do, it's like the market pulse. So wanted to pull up, you can see the dramatic drop here, from 70%. That was June. And, since then, we've had a real big drop off down to 13% right now. And we actually had a crossover for the state ones. So they haven't been climbing that much, but as I said before, it takes time for things to go 7, 5, and then up to 1. So, market's been obviously roaring pretty good here. New lows, obviously. Nothing really happening here. It's been a flat line pretty much, since July for both highs and lows. So nothing really on the popping up. This is, we've had some extended, I kind of compare this run back here, it started here in July, kind of to that March one. But this one's been obviously a lot longer. And higher move, I think, overall, but just something, nothing really pull off of that, just an all normal. You can see like when those things are flatlined, the lows, it's obviously a bullish market. When we get all the turbulence, that's when things start going haywire. So, obviously, just to pull that back, I told him to fix that. The colors on it, I don't know why it's not working. But the highs are the darker. So, since, pretty much, sorry, there's people entering. Since November, this is where we started getting all those crosses for the lows. So since then, it's been very tumultuous. Obviously flatlined here, and you can see it rolled up there. So just if we continue having these like flatlined lows, then I would expect to go higher. Everything, from what I'm reading and seeing out there, I don't think this is over yet, but I think we have a few indicators that'll help us along the way there. You can see here, just huge number, 81% bullish, and the bearish obviously really low. We're still not, based off of our main, overbought would be 45% or higher in state ones, and then oversold would be 30% for the green pie. So we're just in the middle of those, and I don't expect us to get near those, either one of those in a short term. So that's pretty much it for the market pulse. We'll pull up SPX here. See, we just went into state 5 here on Monday. on average, we're doing like a minimal move to 2.6, 14-day average. Down here in the stats, it'll tell you, 44% of the time, it's going to state one from here. So other than that, it looks like it's bearish probabilities overall, but we'll just have to wait and see. It's really such a small move. It's not too much to talk about there. Let's see here. So we're about 42. So let me pull up the chart. I think this is where the real important things are coming. So last week we talked about, possibly running up to that 200. So that's the 200 moving average. You can see the high yesterday was 43.25 and the 200 is 43.26. So pretty much went right up to there and closed well off of that. One of the other things I wanted to point out, and it coincides, I think this is the big takeaway.
Yeah.
I think this is you're the big takeaway for today. Can we get, if we can get above those, you can see, I'd be pretty bullish, if we can get above not only the 200, but this downtrend. So I think that's the key thing here to watch. I saw this in an article. Obviously we're well above that 50-day SMA, and it's actually starting to turn up. So I think that's the big takeaway. That's what I'd be watching. 200 is pretty much right on that line, and it turned right around when it got right up next to that yesterday. So I think that's it on SPX. I thought that was pretty cool. Find that. Russell, obviously been in state 5 a couple days longer, already went up, only 3% move on average. Already went up to, hit the target, within a couple days. So it's met target 2. The typical, and we're not in 5 much, but still like typical would be kind of like this, and then it decides which way it wants to go. So obviously it was a good signal to start off, and where it's going next. This one's kind of weird. State 6, it's only been in state 6 54 days since 2007. So you don't see state 6s too much. That's probably the least utilized state. So got a 40% chance going there, and then the rest looks like it's bullish. So 30% it'll go into state 1 from here. I mean, typically it'll go 7, off the bottom, go 7, 5, and then or it'll go 7 to 3 and then 1. So it's either 7, 5, 1 or 7, 3, 1, and that's if it's going up from the bottom. But obviously it can bounce around in these middle states, go back to 6, go to 4, 7, whatever. It can go to anything, but typically it would go, the most common pattern would be 7, 5, 1. So it had a good start. You'd expect a little resistance here. Looks like it's had some problems couple days here at this 16 level. So I think we're going to pull back today. Overall, we're right in the middle of our range, 19 to 2100. So we're smack dab in the middle of that. As far as the SPX, the ranges, and Joe's going to talk, I think, about Fibonacci levels, but we're well right above that 4200. This range is 42 to 46. So it's got a lot of room up to the top, but obviously that moving average and resistance are going to be keys So that, to watch. Same thing on the chart here with the Russell, pretty much right at the 200. It got above it a little bit, but pretty much coincided with SPX, reaching right around that 200. So this is once again just going to be a key level. If we can get above these 200s, I mean that's a huge deal. You can see, since back here, December had problems, and hadn't even getting close to it until right now. So this is your key levels that you're going to want to watch. It's this 200-day SMA, and then obviously the sorry, let me pull this up. The other 19 to 2100 levels. So that's your support, and then obviously your resistance right now is that right around that 2000, and then above that, whoops, cleared. I did the wrong line there. 2100. There we go. So that'd be top, and that's the bottom. We're smack dab, but just really key on that 200-day. So that's the short of it. Fed wise, it's kind of moved back towards 75. And we had that one inflation reading that everyone got excited about. I mean, we saw like 8-something%, but it was below expectation. So everyone got all excited. I think that's a load of, what, it's still 8-something% year over year. So I don't think this inflation battle's over by any stretch. As far as the rate decisions, it's pretty much 50-50 between 50 and 75-point hike. That's September. So, we got a month out on that, but it was slanting towards 50, and now it's kind of 50-50. I think the key things to watch there are just going to be any kind of inflation ratings, a little bit on employment, but I think more importantly, it's like any kind of core inflation, any kind of those readings are going to be big. Like today, there's one came out for the UK, and it was above the expectation, like 10% inflation year over year. So those things are definitely driving the market, along with the Fed. Balance sheet, still haven't done anything. They said I was just like really excited to see this, how this was going to play into the market, and they just haven't done anything yet. So they said September's, they're going to start taking more off. They've done nothing, in my opinion, so far. So there was a good article. I'll just put it in the chat. I'm not going to read it, but I think it's a worthwhile read. It's talking about the Fed and basically liquidity. So they measure the liquidity of the Fed, and it pretty much mirrors the market. So they're saying, if the Fed does what it's saying it's going to do, it'd be like 3,500 for the SPX by year end. That's if they follow their things. But it was a good article. Overall, just talked about, I'm always trying to figure out the Fed. So put that in the chat. Feel free. Take a look at that. What else? So, I think, just talking about that inflation, really, I think it's, oil's dropped quite a bit. I think that's really just, really helped any kind of inflation, drop. That drives the economy. So, transportation, just, thousands of products are driven off of that crude. So it's been a welcome reprieve. Hopefully it'll stay low. Still well above, last year, but, and 10-year, just very interesting to watch this. I mean, previously I would rarely ever look at the 10-year But, this is kind of the main game in town, I think, to watch. It's just when the yields go up, I think it's bad, obviously going to be bad for, stocks overall. But, we've had some bounces. And, I wouldn't have never guessed to drop that low from, we were up around almost 3.5, and then it, pretty much dropped like a point. Like I would have never guessed that, but definitely, I think a lot of this is just, people are pricing in the Fed reversing. I think that's what the bond market's telling us. And if you look, we're still inverted. I showed you that chart last week about the 2 and 10 being really, really low. I mean, negative. So, obviously 2 years, the highest right now. Three repeating 3 here. And 10-year at 2.9. So still inverted. I don't think that's a good sign. Obviously, we have that kind of inversion. So just keep an eye on it. I think that's it. So I think that's the summary. I'll open up to questions, comments.
I think we're severely overbought.
Yeah. I mean, that run up, I mean, you just look at, from here, I mean, that's a bit, March was nobody would have guessed that. I don't think anyone would have guessed this run up. I mean, this is even longer, So, yeah, I would agree with that.
Yeah, this is Dave. I think your red arrow, I think my mic was open and people probably heard me chuckle, and I apologize for that. But I think you're right on that. We'll see 2 o'clock when the minutes are released. But this rally, I think, was built on the maybe hope or anticipation that the Fed would pivot if inflation was felt to have peaked.
Mm-hmm.
And we'll see. I don't know. Yeah. We'll see though after today. So good point.
Right. But I think, I mean, if they actually start tightening, I mean, that's going to be another headwind. They're pulling liquidity out. So
absolutely. And VIX is, I think, my opinion, and this is just an opinion, but I bet VIX at bottom of 20 is as low as it's going to get this year. I'll throw that out there. It's a radical opinion, maybe, but I don't think we'll break below 50 to hold by it for the year. It's going to be, I was going to say 50, I meant 20. VIX is going to be not going much below 20.
All right. Well, there's Dave's, it barely broke there, but obviously up today. Yeah. Well, I mean, we start seeing new low spikes, and that's when the VIX spike in, things like that.
I'm not sure it'll spike till the next Fed meeting. I think it'll be fairly flat until at least Jackson Hole, but I don't think it's going to go below 20. That's all I'm saying.
Okay. All right. Well, thanks, Dave. The other thing I was going to pull up, because we're going to talk about earnings kind of real quick. Like we put out our earnings plan pretty much like right here, June 15th, right? So this whole this has all been earnings. So pretty much earnings over. So this whole, this whole rally, I think was a lot of the earnings stuff also, not being as bad as expected. So, we got like a month until things start, reporting again as far as the earnings. So this lull time, I think could be, there's not a lot of like things that will be, driving the market other than like, the inflation Fed stuff. So we get some bad inflation ratings, I would expect some big movements, and then then we'll start earnings, in a month. So right before Jackson Hole. So, but that's definitely well timed as far as earnings. I mean, pretty much, a day off the bottom here. And it just pretty much ran up. I didn't see, I definitely wasn't looking for that kind of rally. And just like, March surprise, I think a lot of people just think, get a little run up, make pullbacks, but these are huge runs. So, obviously the key, I think, is just watch those, the 200 and, that little arrow, you can draw it on your own too. So, all right, anyone else got questions, comments?
Hey, Josh, it's Lee. I
Lee.
do, but I don't want to take us off topic of this. Just
Oh.
before we go to Joe, maybe get me in.
Yeah, we go ahead. I mean,
Okay.
I'm just gonna run through earnings. It'll take a minute, so go ahead.
Okay, so I was looking at those trades, those new ones that you created,
Mhm.
and I can understand the Keltner.
Right.
The MACD and the stochastics.
Mhm.
So as I understand it, the MACD, if the line is above the signal, it's, and generally speaking, it's a purchase. It's an indication to buy. If the line is below the signal, it's an indication to sell, roughly. Okay? Are we together?
Sort of,
Okay.
yeah.
Sort of, kind of, maybe. Yeah. But the stochastics, I'm struggling to wrap my head around it because you have fast, slow, percent of K, and percent of D. So can you help me understand how those work together or
Yeah,
against each other?
the K and the D, that's just, all you need to focus on the fast and slow. Those percentages are pretty much, I mean, you can modify them, but you just want to focus on the fast and the slow. So basically, like if it's like here, you can see it's like peaked out, right?
Yeah.
Like it just flatlined all the way up at the top, which is very bullish. It's just holding above like 90. You can see
So
that's
excuse me, is black fast, red slow?
yeah.
Yeah, okay.
So you can kind of look at them in tandem too. So I mean, this signal, it's kind of it's looking for basically like a cross, two crosses. So like these things acting in unison.
Right.
So it'd be like a MACD cross above and a stochastic cross above. So that's what you're looking for. So it's like, very strong move. You can see here they like cross together.
Yep.
And it ran up pretty well. So doesn't have, I mean, obviously, the testing data for each one will tell you how well that's, done over time, but generally it does pretty well.
Okay.
Yeah, but a lot of people look for like crosses, but if it's above, then it's bullish, as far as the MACD, and then this one you kind of want it like flatlined at the top, that's when you kind of get some good runs, like over here.
Okay.
The MACD is above, and this is like pretty much pegged out around like above 90. So, but you don't know how long it's going to last, obviously. But if you get pretty good separation on the MACD, then that's pretty bullish overall.
Okay. Okay. Very good.
That answer
Thanks,
it?
Josh.
Yeah.
That helps a lot.
Okay. Thanks, Lee. Yeah. Anyone else? All right. I'll pull up our earnings trades. So these are winding down. There's only a few left. Let me see how many plan. I'll pull it up here. Yeah, well, it's pulling up. So we have bullish runners, a ton of those closed out. Obviously, it's been a pretty bullish earnings period here. Oh, I'm back in time, sorry. There we go. So we still have three open, three positions. We've closed out 17. Yeah, we got a nice little profit. I think we've had two losing trades, and nothing major, just two minor losses. So, 15 and 2 for all the closed ones, and then we still got three that are open here. But obviously, this one's pretty much done as well as the bullish pre-runner, pretty close. So it's obviously a good quarter for those trades.
That's really amazing.
Yeah, I was surprised.
Of course, it occurs the quarter I decide to avoid them.
Yeah. Yeah, I mean, who would have guessed? The bearish are down a little. I think this one's kind of eating it up. And then we had a few, pretty much 50-50 almost on this. So nothing good. This did pretty well last quarter on the bearish runners. Vol rise. This one's done pretty well. Only 6 trades. This one's closing out today, so I don't know. That may be a loss, but probably. But all the other ones have won. So this one did pretty well. I mean, I was surprised. A lot of these targets did get hit. A couple didn't. That got closed out before, but it's doing pretty well overall. And then we had the non-mover vol crush.
Hey, Josh.
Yeah.
On this summary page of the portfolios, if you could go back to the summary page, is it possible to add the portfolio value? See, you have starting capital as a column, and I have like 5 or 6 of these running all the time, as I'm trying out different things. And it would be really nice on the summary. You have starting, but you could have the current value and the ROC. You follow what I'm saying?
Oh yeah, I've asked for that before.
Because then you could see from all your portfolios, well, which ones at a glance are up or down. You know what I'm saying?
Oh, I definitely agree. I think we've asked for that before, but it was an issue. So we can circle back. I definitely agree. I mean, it'd be very useful to have current, portfolio value up there.
Yeah, because you have to open every single one
Yeah.
and say, okay, how is this one doing? How's this one doing? Instead of kind of seeing the summary on this first page.
Yeah.
When I realize they're right behind, but when they get a chance, it'd be nice to have.
Yeah, I agree. It'd make it easier, and maybe we can add something because you have to go back and then click. Maybe we can have like a drop down where you can pick any of them instead of having to go back and forth. Yeah, I agree. So non-movers are down a little bit. Still got 4 open. All the closed ones profitable. These are the losers right now. So yeah, down a little bit on this one. So the bullish trades did really well and the vol rise, and the other ones were just kind of not, you didn't get killed, but so far, but down a little bit. So that was the earnings rundown. And I was going to pull up the I don't think we have much left. Yeah, let's see here. Updates passed. We got non-mover today, CSIQ. So we got like 1, 2, 3, 4, 5 more trades. So that's about it. I know this thing. we got to fix this a little bit here. So that's it. Any questions or comments in general?
Hey, Josh, on the earnings, Do you know how many trades in total you did and what the end result? And where I'm kind of going with this is I've been hesitant to do these because I think the market has been very bearish. And so this is a big surprise to me, and I think a lot of people. And at least the news I listen to, I hear how the professional hedge funds are way underwater right now. They've been selling a lot of stuff short. And as the market's gone up, it's created problems for them. So really where I'm going, Josh, is how can we look at this? What should I be paying attention to that, in fact, it says, oh, well, Lee, maybe you ought to get in and do some of these. And again, the bullish pre-runners were the ones I like the most.
Right. Yeah, well, I mean, just over time, you know, these, as long as I've been tracking these earnings trades, and that, I think the first one we did was back in the fall of 18. So like this one, so this was like the only really one that we lost, you know, even this one kind of missed. But this one was a loser overall. And then I think we had one back here that was a loser overall. So, I mean, I can't like, you know, predict when the market, you know, I have an idea when things are, you know, turning bearish and stuff like that. But I mean, in general, it's just, I think it's more like a numbers game, you know,
Yeah.
where, you know, most of the time they do well, you know, at least, you know, historically. So, so, I mean, there's only been, I think, like 2 kind of losing quarters since, you know, like 18, and the first one was a losing quarter.
Yeah.
That was when we first put them out. I don't know if you remember, we had like a seminar over there in USF. You know, like we went through all these trades. So, and, you know, we've been refining them and, you know, moved from long calls to spreads. So, I think they're pretty stable now, but, you know, unless, you know, the market's tanking, you know, I think they're pretty good, you know, strategies to follow.
Also, I think they're kind of self-correcting because, you know, you do your query 10 quarters back. So, you know, like the one you do in September, it will incorporate a lot of this downturn that occurred from January through June.
Right.
So the query kind of becomes self-correcting as you incorporate some ups and down cycles, right?
Right. Yeah, it's nice to have a little bit of a down cycle. You know, it's been so bullish.
Yeah, this is why I got so skittish with them, because I felt like we were in a down cycle, but the query would have mostly up quarters, and therefore it wouldn't work out. But obviously I was wrong. So it worked out.
Yeah. Well,
So,
we had a lot drop off from, you know, the previous quarter to this quarter. So
right.
Yeah.
So just kind
The
of
weak
goes to
one.
show with the change to spreads and the way the query is being run, I think it's kind of adapted over time to a much more reliable, to my surprise, even reliable in this quarter, and reliable result.
Yeah. So like this is the beginning of the previous quarter, March 15th. So we had a nice start, you know, and then it just like tanked, right? And then here's this start of this quarter. I mean, you had like gap down huge days, and then, you know, it started like who was bullish right here, you know, after those like massive moves down. I mean, it's hard, but, you know, obviously you can see the result. You know, so, you know, like as long as it's not like gapping down like this, it should be pretty decent. And you can always, you know, we don't have an even number of bearish and bullish trades, but, you know, if you do the bearish, it'll kind of at least give you a little hedge. You know, some of these bearish trades in the last quarter did pretty well.
Hey, Josh?
Yeah.
It's Dave. I'll throw this out now. It could be later. Maybe Joe might want to respond to it, but it has to do with kind of a new thing that I've heard about. The SEC approved, I think, in late July, the use of single stock ETFs, either inverse or leveraged, which implies derivatives and options that we all know about here.
Mhm.
And I was just curious as to whether anybody else has done any research into this. Personally, I've done a little bit, but I think for us, it's kind of a waste of time if we kind of know what options are and can do,
Right.
and the effective implied volatility. But I'm almost afraid that this is going to be another Robin Hoody kind of thing to encourage a lot of volatility to new, younger, not so knowledgeable investors that jump all over this bandwagon and go buy and hold a Apple leveraged ETF for a number of weeks and get killed doing that. Any thoughts, or does anybody else even care about this?
I heard. I never didn't look into it too much, but I mean the ETFs are expensive. I mean you have to get quite a bit of people in there for to hold up. I mean you can see some of these ETFs just dry up and disappear. So there'd have to be symbols. I mean it's not going to be like every symbol has its own ETF. It'd just be high interest ones, I would think. Like Tesla.
So far, those have been the early ones, and I've noticed that there's each. I think Axion and Direction are the two that came out with the first, and there's always seems to be two. There always seems to be an Apple, a 1.5 up and 1 down or something like that, so that they can sort of hedge each way, and they can not actually, the brokerage is not carrying any risk. It's all risk on the investor side with high expense ratios, like you mentioned.
Mhm.
And I don't think they're intended to be used for more than 1 day. That's the part that I'm trying to figure out, whether this is people think that they can just buy a leveraged ETF like this and hold Apple in that kind of a ETF for extended periods of time and even hope to get a good return. I think they're just meant to be 1 day kind of vehicles. So anyway, I'll maybe call Joe later and take this offline, but it was new and I just was curious as to whether anybody else was interested or not.
Yeah,
I saw one for Tesla,
Mhm.
and I don't know, it's a new idea. It may take off. One of the advantages is, with puts, or if you want to buy puts on Tesla, you're going to have to deal with time decay and all that. So you don't have to deal with that with the inverse ETF. They're doing that on a daily basis, where they're shorting the stock or something inside of it. I don't know what. But if you short a stock, you got margin issues. If you go with the options, you got time decay. And with the inverse ETF, you could just hold it like a stock, and assuming you felt you were negative on Tesla. So it might take off.
Yeah. I think maybe for a few symbols, like high interest ones, that could work. But in general, I think those like leverage, they don't really give you exactly 2 times. There's a lot of breakage. So you're not even close to like 2 times the return. So all right, good. Thanks, Dave and Sudhir. All right, we'll let Joe get going here. You ready, Joe?
Hey there, Josh. Hi, everybody. Yeah, maybe I'll, and Dave, I have not spent any time in that levered space at all. But Josh, to your point of liquidity, it's interesting. I mean, big shops, Vanguard's not too far from where I am here in South Jersey. I've been out to their shop. It's been a few years, but they've got ETFs out there, and they, a big shop like Vanguard, you would think, oh, liquidity, would just be get liquidity in a product coming out of those guys, and they struggle, to get liquidity in a lot of their ETFs. And it's been, as I say, a couple of years since I talked to them, but they really haven't been able to figure out why that is. So that liquidity issue is a slippery slope for sure. So I just was going to pull up a couple of the charts that I tend to pull up, week to week. One I wanted to kind of start with is one of the things we've been talking about is, oil topped out before the market bottom about a week before in June. And this is, one of the components we have, on the dashboard. And I think I've tried to look up, what makes it up. And for the most part, it is, futures contracts. And I just thought that's an interesting chart. Just if this thing happens to break this 70 range, maybe we're going to get another leg down in oil. And the futures chart is here, which is, doesn't look to me nearly as dramatic as this other chart here. But I think it's worth at least keeping an eye on, see if the 70 level holds. If it doesn't, it could be a catalyst for the market, heading north some more. The other thing I wanted to go back and look at were the three charts that Josh does such a good job with, NDS, SPX, and Russell, and look at the last three signals to see if there's any hints as to leadership. And I know that the states have a varying degree of success, but if we look at the last two states in NDX, SPX, and RUT, they've all happened really within a day of one another. Both bullish states. We have here July 20th. We went into state 7 coming out of, the state 8, which is back in April. And that was kind of my takeaway from these three charts. The last two bullish states have happened really same day. But if I go back in time, it was the Russell, the NDX, and we're talking it's the 100. That led to the downside in terms of a state 8 signal by a month or two. So it was early April when NDX, went to state 8 and, turned bullish, around July 20th. And it was also July 20th or 21st where SPX and Russell turned bullish as well. But the difference was NDX, went bearish well in advance of these other two. There's SPX, I think it was mid-April where it went bullish. But again, the last two signals, almost match in terms of their timing. And then Russell was kind of not really a whipsaw in price, but, way late to the game with its last state 8. It had one earlier, back about the same time SPX went into state 8. But as Josh likes to talk about, 8-7 to the downside. But just, trying to see what may lead us, going forward. I think I'm focusing now really on SPX just to see if we get on NDX to see if we get, any kind of reversal signal first. From a retracement standpoint, NDX hasn't quite gotten to 50%. Again, we're going back to the highs in November for both NDX and Russell. So not quite 50% there. We've got SPX leading the charge. Josh, did such a good job with the 200-day and, the state resistance with the price target. So we've gotten close almost all the way up to the 5-ace retracement, about 50 points within it. And obviously we've got a pretty big big green candle today. Russell, really very similar to NDX. So, my takeaway, and again, this is always art, not science, is for myself, just focusing maybe on NDX to see whether we get, a downside signal, next and, in advance of the other two. I didn't realize until I stumbled upon this chart today, I didn't realize how far Apple had run in this move. And I just wanted to bring that up. It obviously can be a real driver in the NASDAQ. One other thing I wanted to do with this is just offer a little longer perspective in Apple. I mean, that's one hell of a run in Apple over, it's really been the last 2 months, as Josh pointed out. We had the 2-week rally in late March, and this rally's been closer to it's 2 months long at this point. So they were just the charts I wanted to run through. I know we've got Fed minutes in 15 minutes, and then from a statistical, in terms of stats that are coming out, we got Philly Fed tomorrow, home sales next Tuesday, but really it'll be after next week's meeting. It's next Thursday, where we get some fireworks again with the PCE numbers, which the Fed has said they look at pretty closely. So see what the Fed has to say in 15 minutes, and from a news perspective, maybe not too much over the next week. And again, as Josh pointed out, that 10-year really has slowed down in its volatility over the last month, but it's pretty amazing how with the Fed raising rates, that thing backed off a full basis point off of the 348 highs. So from my perspective, Josh, that's what I want to talk about. Any comments or questions, please? And one thing from a platform performance perspective, and I know Lee had reached out over the weekend. We continue to do a lot of testing and checking on statistics and really improving the data that's coming out of the platform. It's still, oftentimes takes a long time to get there. Shook is in the process of making I think Josh should agree, we don't know the number exactly, but spending actually a hell of a lot of money on infrastructure and hardware to improve performance. So, we'll keep you up to date when that actually happens. I know he's been, talking to a couple of different vendors about that. And as you've heard for many, many, many months, we're working on a lot of things behind the scenes. We continue to do that. And hopefully in the next few months, we'll have, an even better product. So any comments or questions, please? If not, back to you, Josh.
Yep. Does anyone have questions for Joe? All right. Well, we'll wrap it up here. So thank you all for attending, and we'll see you next week.
Bye, everybody.